Good morning, everybody. Welcome to a nice, quiet start to the week. Nothing at all going on. Bit boring. No big news, no big moves. Just another average week in the hood. Morning, K-Man. Welcome back to the hood.
Good morning, Ryan. Good morning, everybody. Yeah, it looks as if somebody had a welcome back present for me in this market. It all starts sound a little bit like Frozen, a whole new world.
Yeah, exactly. Only 27 days into the new month. It feels like a year already.
Yeah.
Funny, but we knew this sort of thing was coming and could happen, so it shouldn't be a surprise. Even though some of the sources of these market moves might be a little bit of a surprise. Right, let's get cracking. Lots to get through, lots to talk about. We'll start getting through some of the data coming out of China first thing. We had the PMIs over there. Well, one of the PMIs, the official Chinese PMI, shall we say, not the private one. PMI services coming in, excuse me, a little bit softer, 50.2 from 52.2. The manufacturing PMI moving back into contraction, was expected to come in unchanged at 50.1. So not good news there. We had a bit of news out from industrial profits, which were up 11% in the year-on-year measure, though they were down 3.3% year-to-date measure. So a bit weaker coming into the year on that one. Not too much other data out overnight. A bit of leading index data from Japan. Not that many people pay attention to that, but that came in a little bit softer, 107.7. That beat expectations, still down on last month. Over in the UK, Morgan Stanley has cut UK GDP forecast for 2025 to 0.9% from 1.3%. We do have this. It's building to be a potentially big Rachel Reeves speech, which is coming Wednesday, when she's going to announce lots of measures for growth, and bits and pieces have already been dropping, as they usually do in UK politics. Some of the things that are being talked about is expanding UK airports, and the latest one is that she's going to try and unlock billions of corporate pension surplus to boost growth and get that money invested. So there's going to be lots of stuff potentially coming on Wednesday. So quite a moment for the pound. If she comes out and the market likes what she's offering, then we could see a bit of a reversal in the sentiment trade that we've been seeing that's been a bit negative. So keep an eye on those UK yields and obviously the pound, because those yields may come down and the pound may go up. Data out of Germany this morning, the old IFO came out, and a little bit of an improvement there. Current conditions showing a point improvement, so beating the 3 pips expected, went up a whole point. That's current conditions. The overall business climate also improved by a couple of points to 85.1, but expectations came in as expected and lower. So things are looking a bit more better. They're currently a bit more better, but the future is not looking as better. So that's going to keep Germany in the negative sentiment slump it's in. Last week's data from the US, we got not a lot. It was a bit of a quiet week all in all, but we got the S&P Global Manufacturing PMI, which showed an improvement to 50.1. Although services went the other way, down to 52.8, so a bit negative on the services side of things there. We've got final Michigan numbers, which had a little bit softer coming in on those ones. Sentiment down, current conditions down, expectations down. Those inflation numbers as well eased off a little bit on the 5-year to 3.2%. But that's still a reasonable jump over what we had last month, coming into Fed week this week, of course. Existing home sales as well, a little bit after that, or pretty much around about the same time as the Michigan. Coming in, no problems there, 4.24 million, well up over expected. And last month, medium home prices, no problems there at all. They were up 6% from December last year, but they were down just over $1,700 from last month, but no problems there at all. Housing thus far for December looking okay. Politics. Mexican President Sheinbaum and Trump spoke at Davos, and they spoke about the importance of US-Mexico trade. It must have been a virtual call about that one, but they're talking at least. We've had more stuff out from Russia. Putin agreed with Trump that the Ukraine crisis could have been eluded had Trump not been deprived of his election win when Biden took over. Says he's open for working with Trump and ready for talks on Ukraine. Ukraine's Zelensky is taking Putin's comments as he's just trying to mess things up. Then we got the first of our big market moving news overnight. Trump came out and out the blue slapped 25% sanctions on Colombia. This was over repatriation flights. Trump wanted to send back some migrants that have been in the US illegally, but Colombia refused to accept those flights. And so Trump came out with those big tariffs, to which Colombia reciprocated by lumping tariffs on as well. So it turned into a big old bum fight. Only for a few hours later, it came about that Colombia then agreed to all of Trump's terms. So that created a bit of a shock, as I say, for that. We had a bit of easing of the tariff trade last week, but that came to the fore again with that news there. And then China popped up in the press, or Bloomberg reported this morning, saying that it promises to take back illegal immigrants after those Trump threats on Colombia, but China had already been accepting flights. So these are undocumented Chinese citizens in America. They were taking those back. They started taking those back last year. Then the next torpedo to the market has been this stuff over DeepSeek, which, if you're just waking up or don't know what's going on, DeepSeek is an AI platform that's been in development for a couple of years. And the Wall Street Journal picked up a report from Silicon Valley where they were pretty amazed and blown away that this AI platform is using lesser components and lesser resources to do the same job as some of the more developed AI platforms like OpenAI. So one of the big things with all this AI stuff is how much energy it uses, what processing power it all needs to compute and whatnot. But these guys at DeepSeek managed to do that with lower generation chips, shall we say, older chips. So that's put a big torpedo in the values of a lot of tech stocks, because by and large, you don't need all those brand new chips, more expensive chips to do the same thing that they're doing now. And that's become a big of a sledgehammer to the market this morning. The market now questioning all those high valuations for the likes of Nvidia and whatnot. So that's been the big cruncher this morning. Kay, I assume you're just playing catch up at the moment. Got any early thoughts on what's been going on?
Yeah. Well, I mean, it's hard to look beside it. Yeah. It's going to be an interesting one because it affects a lot, and not only individual companies, but a whole approach of how expensive AI has been so far, how expensive it is to mine other stuff that needs electricity, and if you start to have well, China, obviously, but if you start to have companies or countries who can produce the same thing with lesser resources, a lot cheaper, and having similar results, a lot of questions will be asked, and I think we are not seeing the end of this, because this could have like very, very big ramifications in a lot of markets. So we have to be quite careful with this, because if it's really finding its way through to the big ones like OpenAI you mentioned, and a few others, and by um, correlation to all the big and very expensive chip manufacturers, it could have like a very big impact on markets.
Yeah, absolutely, and particularly as they've all just over the last week or so all come out with
Yeah,
their new GPUs, new graphics cards, and new
yeah,
chips and everything, and now they may not be needed. So
and
yeah,
well,
that's
yeah, that's one thing, and then also, what's about spending hundreds of billions on something that you could actually make for 200 million, and that's going to be one of the very big questions to be asked. And as I said, it could have like a very big impact, because imagine that there's a not a war, but like a complete rethought coming, and that everything should not be that expensive. I'm one of the first thoughts I had is this could actually weigh very, very heavily if it's true, and if they manage to produce so cheap. This could have a very big impact on inflation and all that comes with it.
yeah, absolutely. Now it should be noted, and you don't need to do much googling to find this out. That this deep sea stuff, since it started, has always run better resources, lower resources than its competitors or its peers throughout its development. So this isn't really new news, but the fact that, as I say, Silicon Valley, people in Silicon Valley have been amazed by it, and the Wall Street Journal reported it, has done a lot of damage. So if you are trading US stocks, you've got to be careful if you're long. I think there's going to be there's always people who are going to come out and buy the dips in these things, as we know, but this has probably got a bit more legs to run, particularly around about now when some US traders start waking up and seeing what's going on and reacting to it as well. So I don't think it's a buy the dip trade yet, and it may run a bit further before it does become a buy the dip trade. If it does become a buy the dip trade, of course. So just don't be too ready to jump in and try and catch those knives just yet. See what the US wants to do with it, and whether it sees it as a huge problem or whether we have the usual goldfish thinking and it gets over it pretty quickly. Okay, then if you've got any other bits and bobs you want to bring to our attention?
Yeah, what I've started to read about Rubio, the Secretary of State Rubio, he is, as we all know, a hawk in a lot of relations, but he has been talking a bit adverse for like Ukraine for one, Taiwan for two. There could be something that we need to at least monitor what is going to come out of all those things, because I can see Zelensky not being too happy about what he's been saying, Rubio, and the Taiwanese won't be too happy either. So we have to continue to closely monitor what's going on the geopolitical and potential war and what not front. So it's yeah, there's a lot of things that are all of a sudden moving in geopolitics, markets, tech, you name it. So we need to be on our toes right now.
Yeah, and just keeping an eye on things because dollar yen's getting hosed a bit under
Yeah,
154 now. So we are seeing a bit of a pickup. As again, we're getting into that time zone where a few US traders might be coming to their desks and seeing the carnage on the screens. Now, it's been a bit of a funny one because dollar yen was actually rallying a bit on the open and coming into the morning. We was up above 156. So this dollar turn has really come a bit later on that, and a lot of pairs were sort of following the risk trade. So as dollar yen was coming down, euro dollar was coming down as well, but we've seen a bit of a bounce now, so it's coming a bit dollar centric. What's your reasoning for that, mate?
yeah. Well, I think it's the question now, and I said in the room as well. The question now is: are you going to continue to pay that much for US, mainly US based investments, if there is a reasonable question that things could be done cheaper? And so the usual correlation, stocks lower, dollar higher, is actually broken for now. And I would not be surprised it continues for a while. I'm not going to stand too much in front of any of those dollar sales right now, because it's a legitimate question now to be wondering, or asking, at least, if you're invested in the United States at lofty levels, are those levels reasonable? Yes or no? And it may take a while actually to find out, because as you already said as well, let's see what the Americans do, but let's also see what those OpenAI and TSMC have to say about that. Can they produce cheaper? In that case, I think there's more repricing to be done, because a lot is based on what's needed to produce, but a lot of it is also based on America is ruling the world. But if you find stuff that is cheaper and working at the same level of accuracy, the question is legitimate. Are we not overpaying for anything US related? And that is now the question that is going to need it to be asked. And I think that's where also you see not only stocks and everything coming off, but also the interest rates being a bit sluggish, because you also if you can produce cheaper, it should, as I said earlier, probably be a bit negative inflation, and and yields may actually come off a little bit as well. So I mean, it's a lot can happen here.
Yeah. Yeah, I think mechanically we're already seeing that. Apparently, we're pricing now 2 full cuts from the Fed, whereas we were lucky to be pricing 1 cut a couple of weeks ago. Just these market moves, as I say, mechanically showing that we may get 2 Fed cuts. We'll have to wait and see as cases how that all develops out. Now, if you're trading stocks, I've got Nvidia up here. As you can see, we're looking like we're going to have a massive gap down well below prior support areas and prior levels. Now, this could, the reason why I'm saying don't think about trying to catch a knife just yet, you get a lot of option trading in individual stocks, and usually those options are trading stuff being in a decent range and holding. So if you're going to get a move outside of some of these ranges, you're going to get a lot of option traders having to chase the market lower to cover their positions or to adjust their positions. So that's why we may get a bit of a blowout before we see any sort of recovery, if there is one to come. So this US Open is going to be very, very hairy. Be careful. And that's without the Trump risk, which is always hanging over us nowadays. So yeah, jumpy markets, and you've got to be very careful with them. Right, coming back to some of the others, as I say, the dollar's weakening a bit against some of the others. Euro dollar, it's dipped down, and quite significantly dipped down to that 104.50 level, and it held there. So that's a pretty important move. When you see resistance becoming support, then it tends to mean the move that we've been seeing is going to continue, and thus this move off of the 102s is going to continue. Now it needs to still chew through this 105 even 30 area, this zone, and I think it's potentially got every chance of doing so with that hold at 104.50 if this move continues. So if we break above here, then we should start to look to see if this area starts holding, be it the top, the bottom, or anywhere in between. Do that, then we're probably on for a move to 106. But it's getting over these hurdles now, euro dollar, and it's looking far less bearish than it was before. Still got a lot of work to do. Still only ticking over some of the shorter term levels, but up here we're getting into some of the bigger fibs of the wider dip from 112, 38.2 at that 105, 72, 73 area. So there'll be a big test up there should we get there. Cable as well, making a bit of a mess around this 124.50, so it's not really something I'm paying too much attention to. We've had a little bit of action around it. I'll just come in a little bit shorter. So we've had a bit of messing around the area. So it's looking more like a bit of a pivot area than a direct level you can probably trade against, but take it as it comes. We stepped into 125, held on a first test, had a little tick up above now. The next level, as is usual with cable, most of the levels in cables come around the big figures or the half figures. And the next level above is up near 125 and a half, getting up to the 61.8 of the December leg lower. Bit of a way to go before we start tapping the 38.2 of the wider 134 move that's up at 126.10. But again, a lot like a lot of the other dollar pairs, they're all moving in pretty the same way. Aussie dollar doing the same, but holding back a little bit. It's bounced off the zone, but it's looking a little bit weaker on the bounce at the moment. So it's not ready to go great guns with that one. Euro sterling, keeping an eye on as well. We were sailing pretty above the zone. Now it's looking like we're trying to hold the top part of the zone, this 84.20 zone. Again, further downside might be in play if the market likes the Rachel Reeves stuff, and that eases worries about UK growth, finances and whatnot. She's already had a bit of a helping hand with the move low in gilts this morning, giving her back some of that fiscal headroom that had been zapped on the back of it. And while we're on yields, before I pump it over to Mr. K, keep an eye on tens. We're banging on this 450 mark. Dollar yen isn't waiting around for moving, but if this goes as well, then that could give a bit of an acceleration effect to dollar yen. So a big psychological level as well was potentially technical level there. That's pretty much bang on the price, 109.06 in notes. Okay, so that's the level we need to watch right now for that. Kay, you ready to show some charts, or do you need a bit of?
Yeah, I've got a couple that I could show. Just wanted to come back on what you said on euro dollar and cable. I think it's a bit dangerous right now to counter. Oh, you could. Okay.
Oh, sorry. Did you want me
No,
to keep it?
I'll take it over, mate. I'll take it over. Thank you. I'll take it over. Don't worry. I was actually, but yeah, I think there's two things I know. Just before leaving, I actually said, like, the week that I'm off, I'm going to monitor two little zones here in the euro dollar is one, and that's around this 105.15.20 where we stopped so far. So this is a daily, yeah. So this is a bit longer term. And then the next one is indeed where you are there around 106.10, but I have a bit of a level around 105.75 as well before. So if the market really views this news as negative alt take, whatever, and negative maybe investments also, as I said, the possibility is that this is being taken as a bit negative inflation as well. We could actually see, I think, this euro move up to the 106. That's a first kind of impression that I have walking in and seeing all the news that come out and all the contradictions as well that have been done over the past week. And also, we are a week now into Trump's second stint at the White House, and it's all still quite unclear. So that was my start of the year kind of play or plan or playbook. Potential playbook is like the dollar getting a bit stronger into Trump's inauguration, and then we need to be careful. And it's maybe early, but this DeepSeek thing may just accelerate this anti-dollar move a little bit. at least for a few more sessions, I would say. And I would not rule it out, to go and have a look at the 106 in the euro dollar. But as you say, 104.5, it gets back down below and hold below, then we may be in for deeper corrections. Hey, cable a bit the same. I have that level at around, so there's a 125.5 in there, but the next more important level is around 125 3/4. I think that's where you have it too. That could be where we end up, maybe even going into reefs. And I really wouldn't rule out an extra 75, 80 points higher in cable before this settles. It's going to depend what the market wants to do with the dollar. Downside here, the low 124s are 124.30, 124.10. That to continue for the cable to go higher should now really hold and move back down here, and then we should jump higher if that's the direction that everything continues to take, which I think is possible. Dollar yen, we have broken a few decent levels. Around 155 we were holding before. Couple of attempts below, always found buyers. This time not. Broken below. Also broken below this trend line, which is around 154.5, which was also a prior high before we continue to rally again. See the 154.5 has always been a bit of a zone where dollar yen saw some decent interest. That is broken as well, and we are now on to the next one, which is around 153 3/4. We are trading actually right on it, but it is looking weak now. I would say this dollar yen. I trust you. You have documented Bank of Japan more than enough. The next hurdle will probably be a bit higher, but as we know, yen has slowly but surely come back to trade risk, and we can say that risk is really under the cush right now, and so the yen is doing pretty well right now. But yeah, respect is 53 3/4. Let's see how any bounce up to 54.5 will be taken if we get it, okay? But this is now looking a bit fragile in my opinion. It's gonna have to get back above 155 to start going up again. But in current context, I would rather say that we find resistance around here, and perhaps go for another look at what's happening at 152. Look at it really from a global standpoint. We know that the dollar yen can put in like really big moves also to the downside. Is it the start of? All possible, but we will have to break again under 152, in my opinion, to confirm that we are now on the way back down. And then I saw Ali commenting on, and he's commenting on the a level to get long gold again. On Friday, Ali, I took my lungs off around 5 3/4, as the people in the room know. But of course, this new event could be a driver to go at least for a retest of the prior highs. Now, again, there's a question to ask now regarding the metals, because gold has also been an inflation hedge, right? It's partially an inflation hedge, and yes, with yields lower, gold should, in theory, continue to push higher. But we have also seen the opposite happen, that gold was rising as an hedge against Trump, hedge against inflation, even with higher yields. So it's not because that the yields are coming down that gold necessarily will have to rally. So this is just one thing that we need to keep in the back of our mind also when we trade these metals, is what does all this mean for inflation on the one hand, and maybe competition on the other hand. I think it is still a reasonable trade because we are globally correcting or still trading at extremely high levels. I think we need to start to be very careful if gold goes back below 27.25. If we get back below 27.25, that would perhaps mean that something there's a different consideration than just trading yields and stuff, and that may be coming under the form of a change in inflation expectations, for instance, okay, because it is a bit of a hedge. And another one where I have real questions right now. I'm still my long-term base long on silver, but I have the same questions there. What is it doing for the competition on prices for stuff that is used to do EV, to make EVs, to even used to produce all kinds of stuff. If we are in an economy that is not going to be as buoyant as we may have expected at first, I'm starting to have questions about this silver right now. We are going to need to break above 31 to continue to go, in my opinion. Before anything of the sort happened, I think there may be a bit of a risk building that we are going to perhaps trade a bit lower, despite what the rest of the dollars are doing, or at least having a rough time to break. If we break above 31, then I think we may hope again for a push higher. But that's basically how I look at things. Perhaps a bit different. I'm really thinking that we may overall see the dollar on the defensive due to what's been going on now, but keep a very close eye, obviously, on stocks. Ryan already showed it. The S&P is a bit at risk here. We may actually um, get down to this trend line support. Could all be the case, but obviously Nasdaq is going to be an even bigger mover on the back of all this. So what is going on there in the chat? No, okay. You're crazy. We're getting good European data. Trump is not hitting euro. Fed's going to go. Well, I mean, if you say like things may get better in Europe and the Fed is going to cut at least two more times, it may be that we are in a bit of a dollar reversal, that the dollar is going to go lower after all. But you're talking about a reversal of the short-term trade. But yeah, it's my base case still, Ali, for 2025, is that there are more risks for the dollar than potential, in my opinion, and as a whole, 2025. But it will depend on a lot of things, and a lot of variables, as we have got now this DeepSeek variable, but there will be many more variables on the geopolitical front, on the tariff or not front. So trade will be a very big, and also we will have to look at, if you look purely at the US, we have to look at what it all means for the US jobs picture, because that is going to be another big one to watch in 2025. And with that, Ryan, back over to you, mate.
Thank you very much, mate. And I think I'm going to put out a little bit of a warning, because I'm reading loads of comments, and even some of you guys in the chat here. You know, this isn't the end of the world. Okay, this is a specific item that's happened, or a specific thing that's happened to a particular particular sector, okay, of US stocks. Okay, it's not the end of the world just yet. So don't let your bias, your sentiment slip too far that way right now. You know what markets are like. We could have a day of this, and then tomorrow we're back up towards all-time highs. I'm not saying that's going to happen, but we've seen it happen before. Personally, I think this has got some way to run yet, but doesn't mean it's the end of the world just yet. Let the price levels be your guide. Okay, don't think everything's going to zero by 5 o'clock tonight. So on that, we'll call it a day for a Monday. I haven't even looked. Actually, we haven't even looked at what's going on elsewhere, Kay. Perhaps we should do that quickly before we pack up for the week, because we do have all the central banks coming, of course. We've got the Riksbank, BOC, and the Fed on the 29th on Wednesday at Rachel Reeves speak as well. And we've also got the ECB on Thursday. Okay, so this week's data, quickly, we've got a bit of home sales data today. Tomorrow, not a lot. US consumer confidence, keep an eye on that one. and dual goods orders as well. Say Wednesday, big old central bank day as well. So that's going to be a big one, busy then. Thursday, as I say, ECB meeting is going to be the main announcement there. But we also start getting some GDP numbers too. I'm not sure if this is final Q4. I think we've had final Q4. Is it? Oh, yeah. So it's the first four. Oh, no, it's the final Q4 data. So forget that. No one's interested in that. And then on Friday, not an awful lot, some retail sales data out of Europe, and GDP from Canada, and PCE on Friday from the US, which should be interesting after the Fed meeting as well. So lots to get stuck into. But we can maybe talk about that in a bit more detail tomorrow. So we'll call that a day for today. And yeah, have a good one, everyone. Stay safe, and we'll see you all tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.